Hey everyone, hopefully you're having a good day. My name's Andy. My channel is Finding Value. Today we're going to go through Twitter, see what people are sharing on social media. It's generally related to three different topics: wealth building, commodities, and/or financial topics. So I'll jump in there. I'll share my financial opinions as we go through it, and let's dive right in. If you want to follow me, it's at Fair Finance. And if you want to join our community, finding-value.com, where I dive deeper into all this stuff looking for investment opportunities. You can see the coupon code on the screen there. So bar chart, emerging markets stocks are underperforming US stocks by the largest margin in more than 50 years. So this is a ratio, emerging market versus US equities. And we are really low, and I do think this is going to turn higher here with some time. This also coincides with commodity bull markets. Commodity bull markets started here and here, and now we're starting another commodity bull market. Precious metals generally lead it, gold specifically, and gold's already outperforming the S&P 500 and technology stocks and other sectors. So I have no reason to doubt that this wouldn't turn higher. I very much think it will turn higher. You'll also start to see platinum breakout, which we are, and that will also coincide with the emerging markets outperforming US equities. They're all interconnected. And really, the driver is a weaker dollar. Anas says just before Israel attack on Iran, Iran boosted its oil exports to unprecedented levels in years, while China stockpiled oil to highest on record. Was this a coincidence? Details below. Of course it's not. Of course it's not. I don't even care what the opinion is. They're loading up their inventory because they know what's coming. Probably war. True Market Leader says still the best explanation of why to keep it simple, why to sit in potential home run trades, and why to stop the daily over analysis. Markets don't beat traders, traders beat themselves. This is Jesse Livermore. I've read this book before, and I've read it, I think, two times. Here's a clip of that book. It says, "It was never my thinking that made me big money for me. It was always my sitting. Got that? My sitting tight. It is no trick at all to be right on the market. You always find lots of early bulls in bull markets and early bears in bear markets. I've known many men who were right at exactly the right time and began buying or selling stocks when prices were at the very level which you should show the greatest profit. And their experience invariably matched mine. That is, they made no real money out of it. Men who can both be right and sit tight are uncommon. I found it one of the hardest things to learn, but it is only after a stock operator has firmly grasped this that he can make big money. It is literally true that millions came easier to a trader after he knows how to trade than hundreds did in the days of his ignorance. The reason is that man may see straight and clearly and yet become impatient or doubtful when the market takes its time about doing as he figured it must do. That is why so many men in Wall Street are not at all in the sucker class, not even in third grade, nevertheless lose money. The market does not beat them. They beat themselves because though they have brains, they cannot sit tight. Old Turkey was dead right in doing and saying what he did. He had not only the courage of his convictions, but the intelligent patience to sit tight. Disregarding the big swing and trying to jump in and out was fatal to me. Nobody can catch all of the fluctuations. In a bull market, your game is to buy and hold until you believe the bull market is near its end. And that's exactly what I'm telling everyone in the community on the website. It's that exact message. It's lining up the big bull market, figuring out that we're in it, and then staying in it for the entirety of the bull market. That's it right there. It's in the book, Jesse Livermore. Now, Jesse, I wouldn't call him the best investor. He traded, but he went bankrupt multiple times. The traders, I don't think there's all that many great traders. There are great investors, but the trading side, a lot of them go bankrupt and broke multiple times. QE Infinity says, so basically the market is up on a potentially fake news that Iran wanted peace. Yes. Yes, it is. And we're going to get a whole bunch of more news that comes out that could be questionable. Here's Sven Heinrich underneath it. 3 weeks later, no trade deals announced, large or small. And that was after Buffett said, over the next couple of weeks, we're going to have several large deals announced. Really, where are these deals that they continue to talk about? Show me the deals. Show me the money. Show me the deals. There's no deals. Why do they keep coming out and saying these things? Are they trying to instill confidence? Um, there was a few people at my workplace that would continue to give customers good news, even though they knew that it was impossible to make the good news in the time frame that they wanted. So basically, they're promising deliveries by dates that that nobody could match. Like we couldn't get it in that date no matter what we did. And this is kind of what I feel like is happening. I feel like they're just throwing it out there to try to gain confidence, but there's no way they can do it. So it's kind of a form of lying to some degree there. A true market leader. Here comes another one. This is from Soros. So former Soros trader Paul Moshe on why the story doesn't always matter. Says I didn't need to know why. Once you realize something is happening, you can trade accordingly. So let's read this real quick. He said, all I knew was the Treasury bond futures were going up limit every day. That told me there was something going on. I didn't need to know why. Once you realize something is happening, you can trade accordingly. Trades don't have to start based on fundamentals. If you wait until you find out the reason for the price move, it can be too late. A great Soros quote is invest first, investigate later. You don't want to get fixated on always needing a nice story for the trade. I'm an empiricist at heart. The unfolding reality trumps everything. The chart pattern comes first, the news comes later. So if people are trying to trade off the news, you're too late. You don't know what you're doing, in my opinion. You need to look at patterns, recognize the pattern, and when the pattern breaks out or things start to move, you kind of have to jump on it. Now, you may not have a narrative, you may not have a story or a reason of why something is doing something. You don't need it. The better investor or the better trader, investor, however you want to call yourself or self identify as, the best ones get in when other people are positioning. Smart money may or may not know more information than everyone else. They're insiders. So they might have insider information that you don't know, but you can see the positioning through the technicals of big money that is, quote, smart money. So if you see positioning, you can't wait for the news. You have to position when they do if you're going to make money in this game, especially in the short term. And I'm not a short-term trader. Josh says most financial experts are unaware bonds have been replaced by gold. Central bankers are raising gold allocation. Wall Street and Main Street are unaware of why and haven't adjusted yet. I've been accumulating ever since 2018. uh, I would say big amounts since 2018 for this exact reason. I thought, and I was wrong for a period of time, but I thought we were going to break out in 2019 of the downtrend line of the 10-year yield. So I started positioning in 2018 in silver and some of these other ones because I knew that the bond market was going to get sold off. I was slightly early in my estimation, and then it happened in 2020, 2021. The bond market peaked and did the ultimate peak and rolled over. But that's exactly why I was doing that. I was basically keeping my cash uh, or safe investments in physical metals. But bonds have been replaced by gold. That's exactly correct. And the increasing interest rate environment is what's causing that. Or it's not causing that. The environment is causing it. It's inflation and everyone doubting that we can control our inflation and the sacrificial uh, real negative rates on the bond market. Warren Buffett on winning more by trading less. And guys, these are incredible insights because I 100% believe in them. You know, not just Warren Buffett and these other ones that I just read. They're spot on. And you need go back and re-listen to this like 7 times and then figure out what it means. So I'm going to read this here real quick. Warren Buffett on winning more by trading less. He says, owners must earn less than their business earned because of frictional costs. And that's my point. These costs are now being incurred in amounts that will cause shareholders to earn far less than they historically have. Long ago, Sir Isaac Newton gave us 3 laws of motion, which were the work of genius. But Sir Isaac's talents did not extend into investing. He lost a bundle in the South Sea bubble, explaining later, I can calculate the movement of the stars, but not the madness of men. If he had not been traumatized by the loss, Sir Isaac might well have gone on to discover the 4th law of motion. For investors as a whole, returns decrease as motion increases. Returns decrease as motions increases. Motion increases is trading. For whatever reasons, markets now exhibit far more casino-like behavior than they did when I was young. The casino now resides in many homes and daily tempts the occupants. One fact of financial life should never be forgotten. Wall Street, to use the term in its figurative sense, would like its customers to make money, but that truly causes its denizens' juices to flow is feverish activity. At such times, whatever foolishness can be marketed will be vigorously marketed, not by everyone, but always by someone. One investment rule at Berkshire has not and will not change. Never risk permanent loss of capital. Thanks to the American tailwind and the power of compound interest, the arena in which we operate has been and will be rewarding if you make a couple of good decisions during a lifetime and avoid serious mistakes. Returns decrease as motion increases, as trades increases. Keep that in mind. Commodities as a basket. GSG close to breaking out of this ascending triangle formation. Yes, if we break out of this, we are gone. And we're going to break out. Give it time. We're going to break out, and commodities are going to rocket. The driver, in my opinion, increasing interest rates, high inflation, and then eventually the decline in the dollar. And the dollar is the denominator of commodities. That's what we're pricing this in. So really, it's the dollar falling. Tavi says, oops, I know no one cares, but the Canadian dollar is breaking out as we speak. This is likely the beginning of a broader move in my view. The Canadian dollar denominated asset stand to benefit significantly from the shift. And yes, that should include the majority of mining companies. Yes, when this moves, money's going to rotate away from dollars, not Canadian dollars, but American dollars, into Canadian dollars, Australian dollars, and all these other emerging markets and commodity companies. It's a dollar related problem. We've got the Sprott Physical Uranium Trust breaking out today. Check it out. URA in full launch mode. So Sprott Physical Uranium Trust, we've got that nice, this is your base, your breakout of the base, the flag pattern that was created. We're breaking out of the flag pattern. That's right where we're at. We're right on top of it right now. Then we've got URA launching higher, breaking through some resistance. And as we break higher, this could be one heck of a move for URA, URNM, URNJ, the equities, and probably the physical metal as well. So everything's looking really good in uranium at this exact moment. My oil conspiracy of the day. Imagine on May 15th with Trump in Saudi Arabia, he meets with the Saudis and the OPEC 8 and tells them he's going to green light an Israeli strike in a month or so on Iran. Saudis and the OPEC 8 ramp up production, acknowledge overproduction in anticipation and plan to replace Iranian production again. Oil prices crater. The opportunity for insiders to buy the bottom and then sell the top would be generational. Oil prices rocket. Yeah, they very well could be doing this. They're trying to get the oil price down, get everybody a nice, good entry point, which I think they did with Liberation Day to some extent. And then they're going to let this thing rocket higher. It's going to be a heck of a move in oil prices, in my opinion. Large gold producer Barrick Gold is a laggard at present, but it has it set up very big picture, which I think shows the potential here for the sector. Odds are very high that with this massive pattern, it will play out. And Barrick is now breaking out on lower time frames. So it's now on its way. Seeing many arguing that precious metals miners are no good just because they, for periods, are lagging the metals. That's not useful information, and repeating that shows one does not understand the miners or big picture charting. Just like the metals, playing miners is all about timing. Many are also worried about the miners not outperforming metals big yet. But it is not usual for metals to take the lead up from big lows. And when the wall of worry really lets go, we will see 8 to 10% up days for GDX and 10 to 15% up days for SILJ. It is imperative to really understand that for markets to even work, most have to be at the wrong end of the sentiment view on things at major terms, breakouts, and levels, always including all analysts, experts, and services. Let's go down to the chart here. This is a Barrick Mining Corp, and I think they have pretty good copper assets too. It is a very probable 32-year halfway pattern that we could see a very big move after we break out of this thing, which we're basically right at the breakout front door here. Back here is the 1980s, mid to late 80s, the big consolidation, and then we're potentially going to get a breakout here any second. Of course, I hit the wrong button there. Coming back down. Freight futures AM update. We've got dry bulk, Capesize down 2%, Panamax down 3%, and tankers are up. VLCC's up 5%, Suezmax is up 3%. And that was pre-market AM update. We've got Paulo Macro here, million bought deal financing for the Sprott Physical Uranium Trust. So it's $100 million, representing the total gross proceeds of $100 million. The net proceeds per unit to be received by the trust will not less than 100% of most recently calculated. I think they even doubled that. I think they went up to $200 million for purchasing. So money starting to flow in the Sprott Physical Uranium Trust could be the beginning of a breakout and a big move. Peter Lynch says, big companies have small moves. Small companies have big moves. Yeah, that makes sense. Here's some of the best one-liners in investing coming from Charlie Munger. Let's see what they are. Wisdom. Acknowledging what you don't know is the dawning of wisdom. 2, every choice has a hidden cost. Intelligent people make decisions based on opportunity costs. 3, don't waste time. If something is too hard, we move on to something else. What could be simpler than that? Choose wisely. Avoid working directly under somebody you don't admire and don't want to be like. Okay, now I admit that. I am completely guilty of doing that my entire career. Um, one of my job that I worked at, the majority of people that I worked directly under, I did not admire them, and I didn't want to be like them for every single instance. So I don't know. Maybe since I was younger, I just didn't know any better. But I would take this one to heart. If you don't want the job or you don't like the person above you, I would definitely look for something else. Definitely. Collaborate. Everybody engaged in complex work needs colleagues. Just the discipline of having to put your thoughts in order with somebody else is a very useful thing. Number 6 is debt. The first chance you have to avoid a loss from a foolish loan is by refusing to make it. There is no second chance. Don't stop reading. If it is wisdom you're after, you're going to spend a lot of time on your butt reading. Number 8, everyone's a genius in a bull market. Bull markets go to people's heads. If you're a duck on a pond and it's rising due to a downpour, you start going up in the world, but you think it's you, not the pond. I think we've got a lot of that going on in the crypto space specifically. Capitalism. Capitalism is a pretty brutal place. I regard it as very unfair. But capitalism without failure is like religion without hell. 10, avoid people with overconfidence. I try to get rid of people who are always confidently answering questions about which they don't have any real knowledge about. Yeah, those guys are full of crap. Yeah. 11, know your circle of competence. I don't invest in what I don't understand, and I don't want to understand Facebook. I love it. I love it. And that's kind of my thought on cryptocurrencies. I looked at it. I saw some things I didn't like, and I'm like, nah, I'm not going into this crap. 12, good business. Good businesses can survive a little bad management. 13, perfect wisdom. You don't have to be perfect wisdom to get very rich. Just a bit better than average over a long period of time. Long period of time is what these guys are going to underline. Failures. It's a good habit to trumpet your failures and be quiet about your successes. Strategy. Strategic plans cause more dumb decisions than anything else in America. Strategic plans. 16, that's it for the day. And that's where we're going to end here. So that's all I've got for today, guys. Give me a thumb up for the content. Subscribe to the channel. Subscribe to the website if you'd like. Special coupon code. And we'll catch you later. This is Finding Value.